Over the past few weeks, we've been talking about the possible establishment of a downtrend in price. Kim, are we seeing that yet?
I think we're very close to it. You can either call it a downtrend. I would probably call it a sideways pattern. Over the last couple weeks, yes, we got the downtrend. We got the pattern at support at 530. We got resistance at 580 on that Kansas City March contract. Our price is real close to that 530. If we break through that, then we will for sure have established a downtrend. If you want to convert that March contract over to the July 21 contract, just add about 9 or 10 cents to that. We've got Oklahoma cash prices now around $5. You know, that's significantly lower than they were a couple weeks ago. And forward contract for this next harvest delivery, about $5.30.
It's been a while since I've asked this question, but do you think there's any chance for $6 wheat?
I think there's some chance, especially as you get out in the long run. Right now, the harvest is finishing up in the southern hemisphere, Argentina, Australia. The next harvest to come online will be in March when we get India, Pakistan, North Africa, but that wheat will not be exported. The next exportable wheat to be harvested after we finish up with Argentina and Australia is the U.S. winter wheat crop. So if you're looking at $6 wheat, I think you're looking at when wheat comes out of dormancy. It's going to depend totally and completely up to weather, and probably more than likely August or September of this next year.
Now, with all of that, how are things looking in the corn market?
Well, I think the corn, if you look technically, we've broken that uptrend just slightly with the sideways pattern. We got support at $4.15, resistance at $4.40. Right now, that March contract is close to that $4.15. If we break it, then we will establish a downtrend for sure. If you look at Oklahoma cash corn prices, around $4.55. If you're forward contracting for 21 delivery or planning out that far to what you're going to plant next year, you can forward contract for about $4.20.
With winter already here and winter crops out there, the focus is on protein for livestock producers. How are things looking in the soybean market?
Well, that soybean contract is still on an uptrend. However, it looks like it's leveling out. It's been traded slightly lower for the last week and a half. You've got support at $11.40, resistance at $12. The price is not as close to that support level as it is for wheat and for corn, but it's going down there. But it looks, unless China comes in this month, we're probably going to see sideways movement in just about all our commodities.
What about the grain markets?
Well, if you look at the grain market in the short run, we're in the holiday season. You can have some erratic movements as the traders get out of positions, take profit, cover positions, or China could come in and stir things up. So it's going to be erratic this month. I think we're going to be in a weather market as we get into January, February, and March. Not much happening to wheat until wheat comes out of dormancy around the world. And if you look out into the 21 crops, I think prices look better than they've looked for the past couple years.
Sounds good. And whenever this whole pandemic thing's over, can we still do the tailgate chats in the back of the pickups?
I'm going to keep mine if you're going to keep yours.
You got it. Dr. Kim Anderson, Grain Marketing Specialist here at Oklahoma State University.